Yesterday, the Reserve Bank of New Zealand cut rates by 50 basis points. That was higher than, let's say, expectations, although there was a 50-50 chance of 50 basis point cut going into the meeting. That sent the New Zealand versus US dollar to the downside, but then it snapped back higher and moved higher in trading here today. However, sellers lined up against key moving averages. I'll talk about that and more in this video, so let's get started. What I just described was this move to the downside. Now, the move to the downside yesterday off of the RBNZ rate decision took the price to a downward sloping trend line connecting most recent lows, low here, and lows through here. In trading yesterday, as you can see, the price moved a little bit below that trend line, but could not sustain momentum, and that started this rally back to the upside. We retraced about 50% of the move to the downside in trading here today. That rest of the 50% was surpassed, with the price moving above the high from yesterday, but finding resistant sellers where against key moving average resistance defined by the 200-hour moving average. Just above that was the 100-hour moving average. Both those moving averages are now converged near the 0.5804 level, as you can see, but the resistance in the Asian Pacific session today sent the price back to the downside, where it fell short of this low going back to earlier in September, or toward the end of September, I should say. And since then, we rebounded back higher, trading in between the high for the day and the low for the day, more toward the low as the sellers try to reestablish resistance or momentum to the downside. What is clear from this picture is that this level becomes more important going forward. Also near that level is a 50% retracement level. If I go to the 4-hour chart and take a look at where that's defined from, it comes from this little low going back to April 9th to the high price that we saw in the month of July 1 to be exact. That 50% retracement and that those moving averages, see them in your mind's eye here, is going to be key resistance. As long as the price remains below those levels, the bias remains to the downside. On the downside, we do need to get below the low price that we saw September 26th at the 0.5753 level, and then get below the trend line, look toward the 61.8% retracement. That would be the progression, but clearly the 50% retracement, the moving averages right through here, are key for traders going forward. Stay below is more bearish. My name is Greg Michalowski. Good fortune with your trading. Bye-bye now.